you need to understand the proper the value. So my name is Rupe, by the way. I've been a developer in the blockchain space for over 11 years now.
Okay.
I started building Bitcoin miners in the very beginning when they were run on a laptop.
What year?
2012,
Yeah.
13?
12. A little
Okay.
bit late.
Yeah.
But not bad. We were approached. I was working with a company that had a data center. Early 2011.
Hi.
Put it on our machines that weren't being utilized.
Right.
We said no like idiots.
Wow. So my brother emailed me the miner. Yeah, he emailed me the miner on my laptop. You could mine on a laptop back in the day.
2014. Wow.
2012.
Okay.
Yeah, 2012. So we were getting 25 Bitcoins deposited every night for mining. And so, yeah, so my brother was a 35-year stack developer at the time, so he was like, this is big, you must do it. He saw it like a mile away. So anyway, started to investigate the code of Bitcoin and how it was going to work, and that's when we understood that this is going to change the landscape of how we communicate value globally. And it's going to change that landscape because it's simply highly secure, and it allows the digital asset to be fungible across borders. And because of that, it takes away a lot of the friction that we currently have in our system, and it eats away a lot of the cost from the bureaucracy designed into that system. So basically, understanding the value prop in blockchain is really the crux of everything right now. Why is it valuable? Why are we migrating towards it? And if all value is migrating towards this, what does the future look like, and how do I position myself to take advantage of that future, right? Yes. And you're doing that right now. So you're trying to accumulate. And so what I do is I teach people my experience over 12 years and the rules that I've learned in engaging with blockchain, how to safely do it, and the pitfalls and the risks, and then also we kind of shine some of the potential rewards on you as well. So right now, understanding the value prop of Bitcoin is what we're going to discuss today, because I think we kind of have a canned crowd. We got a smaller group, and so we might as well just cater to your needs. And so we'd like to pose some questions first before we kind of discuss the topic. When we talk about value and money, we have to understand something. We were born in a box, and this box is our current system, and we know nothing else, and we understand very little else. And what I did was I decided to take a journey, a 6,000-year journey in history, financial history, to learn about money, value, and how it's been utilized throughout history in governments and economies, and why things were valuable and why they remained valuable over time. And this is when it really clicked, and I started to understand the value of Bitcoin, because I saw that it mimicked, it had an actual thesaurus, a ledger of things that paralleled with what we perceived as valuable throughout history. Now that logic carried over shows us a couple of things. Bitcoin is going to be a carrier of value and fungibility across the globe. That's huge.
Say fungibility?
Fungibility is the ability for me to trade it to you for an expected value, and you to accept that accepted value. It's a stable value. A Babe Ruth trading card is not what we consider a fungible asset. There's no real fixed value that we all agree on. It's more emotional, right? And so a fungible item means that we can count on the value, and we understand that that's what the value is, and it's agreed upon globally, even if that value fluctuates up and down. We'll talk about bugs versus features in blockchain and how we perceive those bugs and features later on as we get more in depth, because a lot of people say, well, the value fluctuation is a bug. I beg to differ. It's a feature. It's a feature of honest money that can't be manipulated. But anyway, so what do we want? Do we want money? Do we want dollars? Or do we want the ability to purchase, or the power to purchase things? Do we care if we have a whole stack of dollars, or do we care if we have the ability to buy? Right? And so logically, I think the correct answer is we just want the ability to purchase things. And whether it's in the dollar, gold, or any other form, that's arbitrary. In fact, it's maybe not that arbitrary. We want to make sure whatever we store it in maintains its value, right? Maintains its value and is also in our control, so we can utilize that value when we see fit. And we also probably want to make sure that it can't be taken from us or controlled by a third party. And so when you look at value this way, what we really want is sovereignty our ability to control our own money, our own value, and do with it what we want when we want. And if you think about our current system, we really don't have that. What are we holding now? We're holding dollars. Are dollars scarce?
Are they scarce?
Yeah, are they scarce?
I don't think
No,
so.
dollars aren't scarce. They can print them. QE is what we call it, like quantitative easing. We'll print more dollars to stimulate the economy. But the fact of the matter is when you have an asset that represents value, if you print more, you dilute that value. It's called debasement of currency. And what we're doing is we're currently debasing our currency on a regular schedule, which is stealing purchasing power from the individuals. And then those monies that are printed are actually handed out to other individuals, not back to us. Because if they wanted to print more money, they would have to equally give us the quantity or percentage that they printed out for us to maintain our printable value, right?
Yeah.
But they're not doing that. They're just printing and handing out. So we're losing value right now. So right now, what...
Creature from Jekyll Island.
Yeah, the creature from Jekyll Island.
Want to learn about U.S. currency? That's what you
It's exactly like a monster. And so the truth about it is right now we don't realize that we're holding an asset that is not in our control. It's in the bank's control. It is not protected from debasement. It can be printed. And the truth of the matter is we've seen examples of our government locking away or other governments locking away control of money from people that they don't want to have access to money. So, for example, when they were in Canada, when they stopped all of the truckers' money so they couldn't do their thing or whatever, this is a lack of control that the system has put in place that we haven't realized because we've been sitting in this box for a long time. And so the value prop is really understanding that blockchain gives us a percentage of freedom on our value. And I say a percentage because is anybody going to take all their money and pile it into Bitcoin? I don't think so, and I don't even think that'd be wise. I think we should, though, leverage a percentage of our wealth and value. So if there's emergencies, we can actually have money or power that we have access to regardless of what situation is happening. And so this is really what I'm trying to impress upon people. A 2 to 10% allocation would be smart for any portfolio during this time of growth and exploration into this blockchain arena, especially while we see a cohesive government environment as well, right? They're starting to accept it now. Trump's making promises and he wants this here. So we like Bitcoin because it's scarce, right? We like it because it's portable. If this was a bar of gold, how far across the Mexican border do you think I would get with a bar of gold? Or Germany, or Russia, or China? They would seize this immediately, wouldn't they, if it was gold? So, but if I had $100,000 in Bitcoin, I could cross the border seamlessly because I could keep the seed phrase in my head, or it's not a tangible asset that they can seize or even recognize. So portability in your digital assets or your value that is globally fungible is this new thing that we have not been able to experience before. We've always taken our traveler's checks or taken our debit cards, gone to exchanges, changed for the current currency, and then used that currency. Now we can cross borders, and these currencies are universally tradable and acceptable right on the fly in those locations. So this is important. It's portable. It's divisible, right? It's liquid. It's more secure than any bank. How many people have received a letter that your data has been breached and you're going to be watched for about a year? Great. And I'm sure the people that breached our data know about that year, and after a year, that's when they're going to start their nefarious activity. So I've got no protection over my data. And storage efficiency as well. So being able to store $1 million in multiple locations that you control is far better than having access at different banks that could either shut down or close at any one time. So having that control and storage efficiency is important. Also, programmability. UNLV, they have a current problem right now. They receive credentials that are fake all the time for people trying to continue their education. And so they get submitted all of these false documents for education, and they are constantly verifying and validating to see where this person can continue. And I was speaking with Jamie Schwartz from Blackfire about it. She's like, it's one of the biggest problems we have. Blockchain has a solution for that. They have digital identity and credentials that they can issue out on blockchain. So now validating who you are is as simple as holding up a QR of your identity, scanning it, and then it reflexes UNLV's website and sees the policy ID for this education for this person, and you're confirmed instantly now. No sealed transcripts, no 15-day waits, no letters, all seamlessly done through blockchain. So there's a list of solutions that blockchain is currently offering, and the value proposition is great, and money is now migrating from our current ecosystem of siloed controlled value to a decentralized platform, a communication grid that stores value among other things that we can now start to share. And so if that's the case, we have to kind of figure out how we can get involved, right? Oh, we already kind of covered that one. So we know that printing money debases it, and we know that there is opportunity. Have we ever changed money before? We have. Have we ever changed, like, how long has the dollar been here? 2,000 years? 1,000 years? Does anybody know?
Current form, like 1913?
1913, okay. So
Federal Reserve, right?
we've had, yeah, Federal Reserve, that's correct. So the fact of the matter is human beings, for some reason, about every 100 to 150 years, we change our currency. There have been over 1,000 currencies over the past 6,000 years. And some of them die quicker than others. But the truth of that statement is we are right on the crux of where in society we tend to change into something different. We're right in the median of that shift. We're at the 124th year of a 100-year, 150-year cycle. And look, Bitcoin has popped up, and now we are starting to shift value. This is not rare. It's rare for us because we only live to be about 100, but it's not rare for the history of humans. It happens every 100 to 150 years. So knowing that history and knowing the fact that we do inevitably change means that to put yourself in an advantageous situation means to adopt this type of technology, knowing that this is where value is migrating. And that's really the essence of what it is. Value is migrating. So this was kind of going over the proposition of why Bitcoin is so valuable, but I think you guys kind of understand a lot of it. Does anybody know how many units of Bitcoin can be broken? Because a lot of people can't buy a Bitcoin, right? But Bitcoin can be broken into segments. So do you know how many segments each Bitcoin represents?
7 decimal points, or is it not?
It's 100 million, right? So you could actually, if with the 21 million and the 100 million breakdown, there's actually a lot of currency that can be spent individually in between. The biggest problem with Bitcoin is the fact that it's written on C++, and the code can't be modified very easily, and so it has difficulty scaling. This is something that was unforeseen in the development of Bitcoin. I've been following this for years, and solutions have been arising. This is where you start to see other blockchains sprout up to either usurp, destroy, take over, or assist Bitcoin. These are the two narratives that you're starting to hear in those global communication grids. I'm not talking about Ethereum, and I'm not talking about other networks that are trying to either do commerce or exchange. I'm talking about the networks that are trying to preserve value and globally and fungibly exchange value.
Yeah, they call them that off-chain, right?
Well, yeah, that would be considered off-chain transactions for the commerce and stuff like that. So what we're doing is we're looking at Bitcoin right now, and we're saying, there is a migration of value going into this value store, but there is a limited ability to move it. And so we start to see other networks come up to assist it, and we're starting to hear, just like you said, off-chain solutions, side chains. So people are like, well, Bitcoin has all this value and they can't move it, but I can make a side chain, and I could settle this transaction much, much quicker. And so unfortunately what that means is when we start to bring stuff like that in, we start to bring in a Visa or a MasterCard type environment where we have a middleman that is solving the value of exchange, and now we are incumbent on this individual, and we can't be. That's the whole design, is that the global network acts autonomously, and I exchange with you and I exchange with you just like cash. The second we allow side chains to do that, we've now introduced a global system with middlemen. Those guys are going to get super rich.
They're mostly trying to solve the transaction limit, right?
Scale
3 million a minute or something like that.
Yeah, I think on the newer networks, even with one server on the newer networks, one Hydra head will do 1 million transactions per second. So the scaling issue is already all but solved. It's being mitigated now. In fact, they just had something at the Luxor. At the X Games, you guys know where they do all the gaming arena stuff? I don't know what it's called. What's it called? I forgot the name of it. But
Esports arena.
yeah, it's an esports arena. They just had Hydra Doom go there. What's Hydra Doom? Hydra is a head on the Cardano network, and what they did was they ran the game Doom, and every frame per second in the Doom game, and everybody knows Doom is ridiculous on frame rate, every frame was a transaction being submitted to the blockchain.
Must have been original Doom.
It was.
Yeah.
Yeah. And so what they were doing and what they were proving was that this blockchain head could handle 1 million transactions per second in a live environment while people were competing. And the purse was $50,000 for the winner in the game. But all in the meantime, all of us tech nerds are sitting here watching frame rates going, oh my gosh, these are all the transactions that we could be processing per second.
It's not queued equity into the blockchain, or into Bitcoin's blockchain?
What's that?
It's not queued in equity into the Bitcoin blockchain? You're talking written directly?
Yeah, so here's how a Hydra head works. So you know there's a blockchain, right? So the Hydra head will slice a segment of that blockchain out, pull it away, and start settling it within itself. Because there's some value and then there's some debt. And so it settles it and signs everything that it can within the head. Yes, ma'am.
Help me.
Yes.
Segments of Hydras.
What's that?
And it's settling stuff. So
Yeah.
tell me more about what you're talking about.
Settling? Okay, so settling means, so the biggest problem right now that we're discussing is how can we build these decentralized networks to handle the global traffic of the economy? There's a lot of transactions happening all over the world at any one time. And so scaling has been one of the primary issues in blockchain. How do we scale this to the world? And we've seen a whole bunch of flops. Ethereum, when it starts to mount up and get a lot of traffic, what they do is they raise the fees to bulk the network. And so they raise these gas fees. Only the wealthy can use the network now, and then the poor people have to wait. So we have a network that creates a class system.
Basically surge pricing.
Yeah, just surge pricing.
Just like Uber.
So now the problem with this is we're not working with a product, we're not working with a widget. We're working with our ability to communicate globally, which means we cannot design systems that do that because our voice will be silenced.
Right.
Okay, and so we're migrating away from those types of thinking and we're doing other types of thinking, and Hydra heads are another solution to solve this transaction over time thing without inflating fees. So all the actions that happen in the Hydra head are zero cost. The final settlement applied to the chain is the only fee. So you could quite literally do 1 million transactions with no fee, and then the one final settlement is the one fee, which means you can drive transactions down to a micro fraction of nothing, and still everything is getting settled. So this is why a Hydra head is so valuable. And they just demonstrated one Hydra head with 1 million transactions, and every node operator, 3,000 node operators worldwide, can run a Hydra head independently. So we can do hundreds of millions of transactions per second without having any problems or adding any cost to the network. This is a scaling solution. Okay, so I hope that makes a little sense.
Yes, thank you.
Oh, you're welcome. You're welcome. So that's what we're talking about. So we're talking about the ability of these networks to reach out and actually solve issues within our world. And we know that Bitcoin is an excellent store of value, and it's not connected to any one government, and the value can't be manipulated or debased, and the quantity can't be increased. So that's the same reverse end of debasement. And so if that's what's happening here, then how do we move it? And that's when we start to look at networks like Cardano that are written in the same code as Bitcoin, use a security model identical to Bitcoin, and you can write code on Cardano that will flex out into Bitcoin. So we have not a Visa or MasterCard situation, but a symbiotic code that seamlessly stitches together to lightly execute the value in Bitcoin. So as Bitcoin gets more and more valuable as a store of value, there will be more and more of a need to transmit that value or carry that value. And right now when you transfer value on Bitcoin, it's a percentage of that value. And that's not going to work very long once we start to see $1 million Bitcoins, because you're going to be taking a percentage of $1 million, and that's not going to work. So the solution is to wrap a Bitcoin on a network that is more friendly, and then send that value across another network. And a network like Cardano solves the issue. And they've already figured this out. So 6 months ago, they announced the BOS, the Bitcoin operating system that they're building. Bitcoin is building it on Cardano. Yes?
You say Bitcoin is building it, but who's Bitcoin then? Because the guy who
Bitcoin Foundation.
Bitcoin Foundation.
Bitcoin Foundation, which is the head of development for all, in fact, all chains have a foundation. There's Cardano Foundation, Ethereum Foundation, Bitcoin Foundation, Solana. All of them have their own foundations, which kind of help guide the development of what's happening on a day-to-day basis. So the Bitcoin Foundation realized they had a liquidity problem. They had all of this value, but they can't efficiently move it. And they've been trying to find other ways. Like the initial thought was to work with Ethereum. And they said, hey, we need to work with Ethereum. It's the second largest chain. It's huge, and it's highly capable. And then they realized, well, Ethereum rolls up their entire chain in every block. And their ZK snarks are getting bigger and scaling by the second. And we can't hold all of that data from the ZK snark into the Bitcoin blockchain, so we are incompatible. So Ethereum being a player and migrating value in Bitcoin is probably not going to happen because it's just not efficient. And it's not efficient because their code doesn't play well together. And so that begs the question, well, if the top second network in the world can't do this, which network are we going to have do this? And so there's a list of all these networks on CoinMarketCap. I'm sure you guys can see them. And that list contains Bitcoin, Ethereum, right, 1, 2. And then it's got Binance Token. Is Binance Token a player for this opportunity? No, Binance Token is a privately owned token for Binance to reduce fees on the Binance chain. And the reason why it's so valuable is because it gets a lot of traffic because it transmits the value on the exchanges. But it's not a global exchange for value. It's not like that. It's just a token of use. So that doesn't get in there. And then we have 4 or 5 other tokens. One of them is Tether. And Tether is a stablecoin, privately owned stablecoin that we're having trouble auditing, by the way.
Oh, well, fraud.
Yeah. And so we're not really going to use that either. The next one in line is the 9th token on the list, and it's the only other global operating system, and that is Cardano. And that has digital identity, that has voting, governance, private yield, and self-custody, all embedded right into the token natively. No side chains, it's all right into the core of the chain. Which means when you compare Cardano to any other network on the blockchain, it is the most liberating technology that the humans have ever seen because it allows you, me, and everybody else to directly communicate without any barriers. And it also allows us to grow our wealth without a third party. And that's a revolution. I talked to you guys and I asked you this one question. Do me a favor. Find a place that you can self-custody your own money in your own wallet and yield interest returns and come back and tell me who does it. Because I can't find one other network on the planet that lets you do that. Everybody wants you to send their money and lock it away a month, a week, 2 years. Who's going to send their money away in blockchain in an unregulated space?
It's all staking now.
Yeah, it's all staking right now. So it's really important to understand.
There's no other option.
Staking is the only good way to do it. And so staking, remember, staking is not staking is not staking. Just like a blockchain is not a blockchain is not a blockchain. If you stake on Ethereum, what are you doing with your coins? We'll talk about the protocol. Let's talk about the protocol. If you stake on Ethereum, what are you physically doing with your coins? Do you know?
What am I physically doing?
Yeah. What's up?
Could you just say real quickly what staking is?
Staking is a way for you to take your money and apply it to a network and put it to use, and then you get paid. So
It's akin to depositing your money in the bank.
It's like interest.
it's like interest in a bank, yeah. But the justification for the interest is that your tokens are actually doing work, and then the network autonomously pays you. Unlike interest in a bank is they're taking your money, investing it, making interest, and then they're deciding to give you a little bit back. On the network, when you stake it, it's all pre-built and autonomous. Your tokens do work, you get paid for that work, and nobody can get in the way of that. And that's really powerful, especially for people that are on fixed incomes or for people that are retired and they need to receive revenue on a regular basis. All the other institutions and entities are feeing people some of their money away. In blockchain, you actually can take all your value and apply it, self-custody it, hold it, and earn returns with no middleman and no fees. So a good example of this is I have one of my clients that I did a boot camp with. She had about $2.3 million held by Charles Schwab. Charles Schwab sent her a letter stating, hey, we're going to have to start feeing you principal. Now that you're 75, we're going to have to start cashing out your principal to cover your daily or your monthly living expenses. And I said, that's interesting. Why? I mean, 3.2 million, well, you're probably making a good amount of money on that every year. And so we looked at her paperwork and swear to God, you guys, this is, and I'm telling you, this is a systemic thing. This is not Charles Schwab alone. They were given, she has $3.2 million. They were feeing her $60,000 a year and giving her 30.
Wow.
This is real. You guys are next. When you guys go move your money into the retirement place, that's what they're going to be doing with you.
Without making a lot of money.
Say that again?
They had a nice Super Bowl commercial. That stuff costs.
Sure it does. It's got to come from somewhere, right? So imagine working your whole life for your wealth.
Mutual funds, is that why they're feeding her?
It was in Charles Schwab. So however they were storing her value or whatever they were doing with it. And so, no, they were feeing her. I saw the sheet. I was like, these are all your fees for the year, and we added it up.
Market something, they added something.
I think it's because she was 75 and she didn't know any better.
That's weird.
And it's a crime. I think it's a crime against humanity. They're stealing people's lifespan, and it should be a crime. Because when you go to work and you make money, you spent that time away from your family, away from your loved ones to make that money, and that money represents your time. If you give it to an institution and they steal it from you, they've stole your life. And that's a fact. So the big thing here is in blockchain, we can actually get away from these middlemen. We can start self-custodying our own assets and preserve and even grow our life in a market that is increasing over time. So it is important to understand the value proposition of this. Time is a factor. This migration of value will occur for the next 20 to 30 years according to history, which means the people that get in now will probably do the best over time. You can get in 10 years from now and still do great. You can even get in 20 years from now and still do okay. But the big moves will start to occur within this time frame and over the next 20 to 30 years. So we're early, and that is why it is so weird, so complicated, and it's not easy to understand because it's so new. In 5 more years, this will be commonplace. It'll be like milk, eggs, bread. I know this. But right now it's new, and you guys are the cutting edge. You guys are the future that's interested, and you will be getting into this. And so congratulations, you're going to be the group of the new future wealthy people in the world.
Have you read up about central bank digital currencies and how that might affect these blockchains?
Yeah, CBDCs. So CBDC.
Past 2019 in that bill.
Yeah.
Federal government's allowed to make one now.
Well, yeah, but
Trump just put an executive order blocking it.
blocking it, right? And so the CBDC will not come through. And why will the CBDC not go through? Because the CBDC is a centrally controlled currency by the government, and people. There's 3 things we should never combine in history. They all turn out terribly. If you check, I got a lot of history in me, 6,000 history, right? If we combine religion, government, and money, you get tyranny. Okay? So we cannot, throughout history, every time we've combined these metrics, it overpowers the group and they take control.
So you
I don't-
really think they're not going to do it?
They can't. They can't do a CBDC because that would be combining money
All
with the
they have to do
government.
is revoke that executive order if they can.
But I think they shouldn't. Let's be real, right?
okay.
Anything can happen. I mean, we live in the day where horrible things on this world have happened. Tyrants have occurred, and many people have been hurt. And so that is why I take this stance, first of all. Because I know in history, things can go really crazy. And so protecting yourself in this way preserves you. But, I don't know if he'll revoke that executive order.
Sounds suspicious to me.
It is scary.
Trump made a meme point.
But I'll tell you what, if he does produce a CBDC, you guys are going to be very happy that you bought Bitcoin.
All they have to do is move welfare to it.
Yeah. A centrally controlled digital currency. So just like a Bitcoin, and the Bitcoin network is decentralized, it's owned and controlled by no government. It's literally just random people across the planet setting up miners supporting the network. That is a decentralized network. A CBDC is completely centralized. It's owned by a government. They issue the token, they control the value, they control the quantity, and they give it to you. So Venezuela would be an excellent example of a CBDC version of Bitcoin. So they just bought Bitcoin and they're using it as their primary currency, but the government issued all the wallets to all the people, and they put the Bitcoin in the wallets. So at any one time, if they don't like you, they just delete your wallet and say you have no access to money. People don't realize that yet, but it's possible. And so understanding what is possible, where the risk lies, and then how to store your money and grow in this environment are what I teach. I teach all of those things nobody's really paying attention to, all of those risks, self-custody versus custody in an institution, or quantity versus fixed supply, or decentralization versus CBDC. All of these things will be important in the future. They might not matter now when things are good and everything's growing. But over time, if we allow them to have those levers to adjust things, they can hurt us in the future. Which means if we position ourselves correctly, then even when they decide to pull those levers, we won't be affected. Okay? So, and that's the point of what I teach. So my primary ethos is what I do is I sit with you guys in a blockchain boot camp. This is my intro, just to teach you the value proposition of Bitcoin and to kind of discuss these qualities. It's a 4-hour boot camp. It is not easy. Come with coffee and come ready to learn, because we're going to teach you and sit down and you are going to build a private blockchain wallet that is connected to a global network. I'm going to teach you how to build your access points. I'm going to teach you how to build all of your security, and then I'm going to teach you how to duplicate it. Because anybody that has one blockchain wallet is crazy. You should have a minimum of 5. And nobody really understands this yet, but I do, and I wish to share it to as many people as I can. So if you guys want to sit down with me on my boot camp and do this training, you will be prepared for the digital future of money.
Unfortunately, I have to go.
Yeah.
I'll be able to see this video online. On
They post this on YouTube. Yeah, thanks guys, appreciate it.
What is your boot camp?
I do private boot camps. You go to my website, we do a consult on your specific needs, whether you're a business and you're opening asset acquisition for your company, or if you're just private and you want to just allocate 10% of your portfolio into a private environment. Once we figure out what you want to do, we'll talk about the agenda of what we need to cover, and then we'll actually build it out. There have been boot camps that I've done for more than 4 hours. If you're looking for something special, maybe a family bank type situation, then we could take a week or 2 to do this. So it just depends on your needs. And that's why I do custom boot camps. I used to do groups, and I found out everybody was so individually different with their questions and understanding levels and their technical prowess. It was impossible to move forward. I was stuck. And then the advanced people would get bored, and then the new people would, It's easy. If I've got a bunch of novice individuals or a novice individual, it's so easy to go through slowly, and we just pace ourselves. But if I've got advanced people with new people, it gets difficult. So yeah, I do private boot camps. You just go to my website, cardanomint.com, and you'll see my ethos, what I do, how I do it, and then it says book an appointment. And then you'll get on the phone with me and Zoom with me, and we'll do it again. So anyway, you guys, so we are looking at a wonderful, I'm trying to get into a better talk, because the individuals that I started with were, let's see,
By the end of
more into that.
boot camp, are
You got a wallet set up.
you're completely ready to go?
So what I did was I created an environment where we could create fake wallets with fake money, and you get to utilize and play with the anatomy of the wallet, how it works. We practice sending money back and forth so you can understand the mechanisms, how they work. And once you're comfortable with that, then we teach you how to build your private wallet. So I give you homework. So we'll work together for an hour or 2. And I'll say, okay, I'll see you tomorrow. And then I'll give you homework, and then you come back and you'll have a couple of wallets built, maybe some value in those wallets, and then we'll continue forward. And then by the end of the week, by the end of the 4 days, you are pretty comfortable with a wallet, constructing a wallet, destroying a wallet, building a backup, and transferring value, which are the keys, all the keys. And then in each one of those, you understand all of the risks, so you don't end up overexposing yourself or sharing data mistakenly. A lot of people get hacked and they don't realize they were doing something so obviously a mistake, they just didn't even realize. I was like, oh, I'm sending money on my computer right here. See, I'm safe. No, you just typed your password on a computer that's online. You're done. That will be discovered over time, and you will get hacked. So I teach people how to not do that. And
Technology for being able to be successful in this boot camp. So can I bring my home laptop and be done and be good, or do you need something more?
A home laptop is fine, as long as it's your own home laptop. But honestly, you do require, if you're going to invest significant money, I would require you to get what we call a hardware device. And a hardware device is like a Trezor. And what this device,
What word again?
a Trezor, like treasure, like think of buried treasure. But it's Trezor, and what it does is it represents an offline computer. So pretend this isn't a phone. Actually, we'll do this. Trezor is kind of like this, right? And so you have your computer with your wallet that you set up, and your wallet is a portal into viewing the data on blockchain. The wallet isn't actually holding anything. The wallet is simply queued into the location of money on the blockchain, and that's how the blockchain works. And so you want to communicate with that wallet, but if I want to send money and I type that password in on that wallet, on that screen, I'm actually risking my password. So the wallet is trained to send an encrypted transaction to the Trezor. You put in the password on the Trezor, not on an online computer, and then it rewraps the transaction, re-encrypts it, and sends it back to the computer. The wallet then receives that wrap package and will send it on the blockchain for you. Now, why do we do things this way? Because it's a multi-factor in one way, right? Because it's proving you can send the money, but it's also doing an encrypted transfer of data. And this encryption is the same SHA-256 hash encryption that is on blockchain, so it's not going to get hacked. And you sign the transaction here, you send it here, and then send it onto the blockchain. Why do we do it this way? Because if you were to ever download any kind of malware, yeah, oh, so much cooler, so much cooler. If you were to ever do it on a computer that was compromised, had malware or keystroke counters, then you typing in that password means that you've just given somebody your password. And that gets emailed to somebody, and then you go to sleep, and then you wake up one day and your money's gone because they were able to get in your computer and use the password. These devices allow somebody to carry millions and millions without worry. In fact, there's a test out there right now. The Satoshi wallet contains $98 billion or something like that, and it's protected by a Trezor, and it's public, and nobody's been able to hack it yet. So if they can store publicly 98 billion, why not you hold whatever value you have in 10%? I'm sure you won't be the first target.
Right.
Yeah, I'm sure there's higher targets to alert you to say, maybe it's time for me to move my money.
Well,
You
and
know?
then there's going to be people who are targeting people in the aggregate. They don't care how much it is.
True. And so you really want to be careful about it. And you guys, I don't divulge any of my secrets. There's a lot of secrets. I want my secrets to go to people that are interested, that want it. We have secrets of how we are storing our backups. We have secrets on how we're creating our backups. And we have secrets on how we are sharing that when needed. What if you stroke?
What if you what?
What if you stroke? What if you set up all these wallets and then you stroke? What does your family do with all that value? They don't know how to do it. They didn't set it up. They have no knowledge of this. So there are certain things we need to do to help our family get that money if we ever pass or if something ever happens. And I help you guys design those as well. Okay, so we talk about hard backups for lost or damaged materials. We talk about why and how to back up properly. We talk about passwords, security, Trezors, and how to use them. And then we teach you how to physically build these wallets, destroy them, and rebuild them with your backups to prove that everything works. Only then we start to store value in it. And this is not the norm. You know what the norm is? I want to open that wallet. I'm going to open that wallet. Oh, screenshot my seed phrase. Forget that. What was my password? I don't know. Okay, I'm going to move $5,000 in. And then they lose their money. So if we can get people to stop and wait a minute and realize this is your value, this is your money, there's no customer service. You need to do it right the first time, and then you don't have to worry, but you do have to do it right the first time. That's what we teach in our boot camp. So I want to make sure you guys don't lose your money. Like I said, I do this as a passion project. I retired 7 years ago. And my goal was to make sure that nobody lost money on blockchain anymore. A, by understanding the fundamental value of what it is and why it's valuable, and staying away from the million pieces of junk out there. And then when you actually have nailed the right chain that actually will preserve your value, how to truly store it and protect yourself so you won't lose it, and so your family can get it later.
I've never invested in Rupe because I'm like,
You don't know, yeah.
yeah, I don't know how to make sure that
It's safe.
secure. Yeah.
And that's exactly what I teach. So jump on the boot camp, check it out. Yeah. So jump on the boot.
What's the longevity of your solutions? With the tech constantly changing?
Well, the cool thing is A, what I teach is universal, so it applies to all blockchains. So I don't teach any special maneuver that you can't parallel into another chain. If you paralleled it into another chain, though, that's your choice. You would just have to realize what risk you're incorporating. The way I do it is I try to incorporate zero to no risk in the whole path. And that, to me, is where the value lies. So I'm sorry, did I answer your question when I said that? What was your question?
Well, I remember I got my Trezor. I'm not sure if it was a Trezor or there were like two brands back in.
There's a Ledger and Trezor.
Okay.
Ledger is compromised. I believe the company, something happened to the company.
Yeah.
And I can see what they're doing, and I do not like any maneuvers they're making. I think it's very, very shady.
It's also scary buying one of those devices because they can also be compromised. That's
Yes.
another story. So I got mine in 2017.
Okay.
And I remember, I wanted to put a coin on there, and they were like, "Oh, it's not compatible with it."
Yes, very true.
So, let's say there's a new technology that shows up, a new blockchain, new coin, whatever, and it doesn't go on my Trezor. Like what?
I'll tell you what. Take my class, learn why and what is really valuable in blockchain, and then you'll understand why Trezor and Ledger don't post all coins.
Oh, okay. Yeah.
Does that make more sense?
Yeah.
So it could be the very fact that the coin that you're buying isn't on Trezor and Ledger for a very good reason, because it's probably not going to be valuable over time. What?
The seed phrases,
Yes.
where do you recommend that I tattoo those?
Put them on, paint them on the outside of your house on the wall. That's the way to do it. Yeah, the seed phrases are a big deal. We want to make sure we put those on crypto steels. We want steel backups. We don't want paper backups, because paper is not durable over time.
You said a steel?
A steel. I'll bring you one. I'll bring you one. It is a piece of steel, and you literally etch the words onto a piece of steel. How crude is that? But when we're living in a highly technological world with AI and keystrokers, the last thing we want to do is digitally store the ability to get back to our money. We don't want to digitally store that.
Like, the physical world is destructible too. Like
Sure.
Palisades, anybody that has steel in the Palisades doesn't have one now.
Yeah, and if your house is burning, you probably want to grab your steels before you bail. You know what I mean?
If you have
I
that
think,
opportunity.
yeah, hopefully you would. And if you design in backups, you won't have one backup in one location.
What if someone gets a hold of this?
If somebody were to get a hold of your steel, you have time. If they've got your money, but you do have time. If they are running away with your steel right then, they need time to sit down, build another wallet, restore your wallet, and transfer the money out into the new wallet. So the race begins. So you get home, you transfer all that money as soon as you can to any other wallet that they don't have the steel for, and you're safe.
So you have to have a steel for every single one of your.
I'm sorry?
I kind of missed
Yeah, I can. But if they don't know what they're talking about, it could take them a few days. I had somebody that tried to steal $100,000 from a client, and he couldn't figure out how to move the money, and we were able to move the money out before he got it. So he actually stole a box of silver and Trezors. And I said, okay, well, he's got the papers and the Trezors, so he's got access. But I see the money right here. Let's get it out of here. And so we built a wallet real quick and moved the money, and he was done.
What treasure?
Trezor. Trezor.
Trezor.
TREZO.
You had told me what you recommend buying.
Yeah, Trezor. I like the brand Trezor. Now, Trezor has 3 models. They have the Model T, M, and the new one, the 3. But either one is fine. The $79 one. You just don't want to get the Trezor one because I think they're phasing that one out. Just get the newest one.
You sound like Sean Connery when
Treasure. Yeah. Get your treasure. So these are the types of things that you want to consider when you're interested in entering the blockchain space. You're going to do it much more intelligently than your peers. You're going to invest time in understanding value. You're going to invest time understanding the wallets. You're going to invest time understanding the security behind the wallets. When you enter blockchain with that type of knowledge, it becomes a lot more interesting and fun because you're not worried about risk. You understand how the wallets work. You understand where your money's coming from and why it's valuable and whether or not this network's going to be gone tomorrow or here in the next decade. And so, yeah, take the class. It's really fun. I love spending time with people. Otherwise, I stay home and I do 3D printing and I ride my bike and I get bored. So, yeah.
Put your money in. How do you transact with that? I mean, where is it available? Like, you know, in the real world right now.
The growing arena of blockchain. So the growing arena of blockchain is growing, and I've been watching it. And so for me, this is like a little tester wallet that I have. So for me, I'm definitely seeing the growth. Right now, just understanding this wallet anatomy here. Now we have the wallet in the top corner. Yeah, come on up. Sit as close as you want. So we have the name of the wallet in the top. I call this one Blister Pack. And I have Blister Pack here, and then if I touch it up here, it shows me what's in the wallet in here in this interface. So when I'm looking at the wallet, I have the tab account, which is showing me the front data. It's showing me the transactions that have been made in this wallet. It's showing me the ability to send money from one place to another, and I can also receive money from another individual. So I would go, oh, you want to send me some money? Cool, scan my QR. And that will go right into this wallet. Okay? So this is how these work. And then staking, so if you ever want to earn interest on the wallet, which I wouldn't, I would want every wallet I own to earn interest. I don't even care if it carries, $1,000. I want it to earn interest. So I turn on all my wallets and I make them earn interest. And you can do that with these wallets. You can do a private wallet that doesn't yield interest. You can do a private wallet that does. It's up to you. So that's where you would do that. This net.
2.5% in fees on that.
2.5% in fees on my server. Yes, and then there's 1% here, 2% here. These are global servers all over the world. 2.5. This is a 0% fee pool right here. So there's zero fees. Oh, zero fees on this pool here. So you'll see people change their fees based off of their needs. So my pool is private. This is my family and our money, and then we teach people about blockchain, and if they wish to get on a private pool, they can. Or they can support any other pool. Typically after people hang out with me and I teach them this immense array of complex tech, they're like, I'm on your pool for life. And then they'll stake with my pool, and so they'll do that. But other people are doing other things. They're building pools for causes, and then they dedicate all those funds to pay for some cause or solution or something that they are standing for. I stand for education and blockchain, and so when you support my pool, you're supporting me getting out here, teaching other people how this works so they don't get scammed. So there's my pool for there. Also, this network has voting. Why is voting important on a blockchain? Does anybody have any ideas why that would matter?
It's a decentralized network.
Who's in charge, right? Like we have Apple and a board. They make decisions. But if you have a decentralized network, who's in charge? Who makes the decisions? The people do. So we have money controlled by the people and their vote, which is why this network has a voting mechanism. In fact, guess what they just voted on? We all just voted to reduce the treasury amount from 20% to 10%, which means all of us just got a 10% raise. All that money goes back to the delegators and node operators instead of going into the treasury. So we just did that last week. So all of us are going to start to make more money every single week. Yeah, what's up?
Just generally, the way we use money today is very simple, and the simplicity is accessible to everyone. The complexity of this is kind of a tax. Like only certain people can figure this out or understand, or even get good information, even if they learn from the right places.
Right.
How do you see this getting simpler as it gets more mass adoption?
We are very early, you guys. Simplicity is on its way. We have major corporate adoption on the rise now. They have just slated $20 trillion to go into this market for development. And so what we're going to see now, we saw the first 10 years of early adopters, the craziest people, right? And now we've just got government approval, right? We have our president who's all about it. And now we see ETFs forming across our stock market for blockchain. We have ETFs for Bitcoin, we have ETFs for Ethereum, we have ETFs for Cardano, and many, many others. So the businesses...
You can actually transact and buy things with your Bitcoin.
Oh, sure, yeah, you could even do that now. Oh, my point, I was saying with... Yeah. My point with you...
I'm aware of it because I've done it.
Yeah. Oh, hey, are we all set? Oh, gosh.
Are you done now?
Yeah, we're good to close out. Okay. Thank you so much for coming, and we'll see you on the next one. We're going to continue with this class now. We got some interesting questions. Thanks, guys. Bye.